Video game stocks getting wrecked as two of the biggest names in the group warned there could be more trouble ahead, and maybe a sign we've already hit peak video games. Let's go to Josh Lipton in San Francisco with more. Hey, Josh.
Mel, let's start with Electronic Arts there, which printed revenue that missed the street's forecast. EA, we know, is dealing with a lot of competition from other big publishers like Activision, as well as that global phenomenon that is Fortnite. Remember, Epic said in November that Fortnite reached 200 million registered players. EA acknowledged on the call that it made mistakes, emphasizing the single-player experience of its game Battlefield 5 rather than the popular Battle Royale mode of Fortnite. Then, of course, there is Take-Two, which also got nailed in today's trade after delivering a disappointing forecast. CEO Strauss Zelnick was on CNBC today. Take a listen.
Fortnite was a huge hit last year. That's great. We admire the work done by others. We'd like to have all the hits. We don't always get all the hits. At the same time that Fortnite was doing well, Grand Theft Auto Online had another record year. And Red Dead Redemption 2 has sold in over 23 million units at the same time that other titles are in the marketplace doing well. As long as we deliver quality, people show up. And that's what we've seen in this quarter, and that's what we're projecting in the year.
Now, one question for video game investors from here: do these disappointing earnings results signal some kind of peak in video games? I checked in with Michael Pachter of Wedbush. Now, he says no way. In part, that's because how this content is delivered is changing fast, he says. It's not just about traditional gaming consoles anymore, but also smartphones, Amazon downloads, and streaming platforms. And Pachter argues that's going to help drive strong growth in the future. He calls the sell-offs we're seeing in Activision and Take-Two big buying opportunities. Mel, back to you.
All right, Josh, thank you. Josh Lipton in San Francisco. Is this an opportunity, do you think?
So I think here's the opportunity: is that maybe there's a lot of competition out there right now. But if Take-Two and these guys can figure out a way to monetize in-game, the concept of your digital twin, the concept of having
Hold on.
You've
got a digital twin, Brian?
Well, don't we all? Don't you all have digital twins?
Wait, is this different from an avatar? I hate to be a video game innocent or idiot or whatever you want to call me. Is fine.
Never be that.
No. It's just you, your digital version of you.
Okay.
And then you have a whole digital wardrobe and your digital closet.
Oh, and then I can buy digital
what you're talking
clothes,
about.
buy digital food.
That is a revenue stream. They're not there yet,
right.
And there's a lot of competition. But to me, I don't think buying the video game stocks is the way to play that. I think there's other ways to play that.
I need a twin.
We're definitely not at peak game. We're not at peak video game. We are getting to a case where it could be peak competition. 15 times very cheap right here.
So we ask, is the group heading for a reset? Joel Kullina is the head of technology trading at Wedbush Securities. Joel, great to have you with us. So is it...
Yeah, thanks for having me on.
When we see these two negative data points out of EA and Take-Two, do we think that there's an industry-wide theme here? I mean, is it, the competition of the Fortnites? Is it this move to the freemium? Or are these individual stories that you see that shot themselves in the foot?
Yeah, I mean, it's a combination of kind of everything you guys touched on earlier. You have an investor base which is really kind of reassessing the multiple that the group deserves. I mean, we're seeing a mean reversion to the multiple from historical levels. Do I think some of today's price actions a little bit over exaggerated to the downside? Potentially, especially in Take-Two, Activision. I agree 100% with Pachter on those. But you look at a company like Electronic Arts, they cut their first warning was back in August, where they missed on kind of FIFA World Cup during a World Cup year. Mobile performance was terrible. They sold only 7 million Battlefield 5 units versus 15 million units just 2 years ago. So they've kind of missed the board. They missed across all metrics, and execution was a big problem. And I think the Fortnite effect is real, and hence why we heard that from Reed Hastings over 2 weeks ago. He called Fortnite out as his #1 competitor, and is clearly taking money at the expense of the publishers. I mean,
in a case like EA, you say that Battlefield 5 was crap before it was even released. That's not my word. I believe that's yours. So is this sort of like a movie studio where it's just a release away or a pipeline away from getting back to its glory days in terms of the stock multiple, or is the jury out on EA?
I think right now the jury's out, at least in the near term. I think stocks will remain in the penalty box for at least the next 3 months. And I think there was also in late Q3, a little bit early Q4, we saw a revolving door at the management and studio level as well. EA got rid of a lot of top talent. And to kind of they really just have no credibility who's going to step in and produce that top content. I don't think the investors have much faith in the current leadership, and hence why it's probably a good candidate for an activist to step in. We all know the gaming sector is not slowing down. There's 2.3 billion gamers globally, according to Newzoo, that put out a report last month. I mean, the TAM is phenomenal. It's not going away. This is where younger generation kids are doing. They're playing video games, and I think there's opportunities. But right now, EA, I wouldn't touch it with your money. I'd be looking at Activision. A name like Ubisoft probably has a little bit more runway as far as margin expansion goes. They have a game called The Division 2 launching March 15th.
Right.
And even on the mobile side, Zynga reported great numbers tonight.
And Activision Blizzard, is that a takeout target? I mean, as JP Morgan would say, they think Apple should buy an Activision.
Yeah, I thought JP Morgan's note earlier, I believe it was on Monday. I thought it was a great note, and it does make a lot of sense. It would be very, very complementary to kind of hopefully drive the replacement cycle for the high-end smartphones. They've obviously been ahead of the curve as far as 3D sensing, AR, VR technology goes as well. So it definitely makes sense for Apple to make a big push in the video game space. So I think it's definitely a possibility.
All right, Joel, great to speak with you. Thank you so much. Joel Kullina of Wedbush.
Okay, thanks for having me.
What do you think, Pete?
You know, I don't think the opportunity is in buying these names. I think the opportunity is what feeds into these names. And so I'd immediately go to NVIDIA or something like that, where you've got revenue is there 67% coming from gaming.
Yeah.
Everybody looks at NVIDIA as something else, crypto, whatever they want to look at. The reality is it's still in gaming. That and AMD are both in that category. I like them both.
I think Activision's sort of interesting here. I mean, it's down, you know, with the group. It was 81, 2, I don't know, and now it's 43. And not that much has happened. That, to me, of the group seems the most interesting. I think EA really, yeah, you don't know what you're getting, really.
Well, I put it this way. First of all, you're getting almost $14 a share in cash, and you're getting a company that I think management is for EA. And I think management's done, as Joel pointed out, I think management's done a terrible job on guidance here. But why shouldn't Amazon be stepping up to the plate to be consolidating this industry? I mean, it makes so much sense for their business model. I agree that Apple should be there too. Both of those names are talked about as not only major competition but consolidators in the industry. But 15 times forward, I think EA, versus 25 times the 3-year average. I think there's value.
So I agree that all of these are probably a takeout candidate at some point. It makes a lot of sense for a studio, somebody like a Disney. Now, problem that Disney has buying most of these games that are popular are first-person shooter, not exactly conducive to the mouse ears.
Listen to you.
Nonetheless,
this digital, Brian, talking
this is
about?
digital.
The twin, the first-person shooter.
Listen,
I
I'm
mean,
just
I
back
don't
from
know
a
what's going on
Bitcoin
here.
conference. I got all this digital stuff on my mind.
Let it out, Brian.
Yeah.